Okay, welcome everyone. We're going to start off with the broad market analysis, looking at the charts, using technical analysis to try to find where the probabilities lie of the next profitable trade. So again, nothing here is guaranteed. It's all about probabilities, and then we just have to monitor the trade. So if you're new to the channel, check out my stock market technical analysis course, link in the description below. It's a 4 to 5 hour course, and it's got a lot of good, valuable concepts that will teach you how to use technical analysis to find your next trade. So check that out. Let's get started. Triple Qs. All right. So in the short term, we've got a sell signal on the triple Qs, but it's not that impulsive, and it's really just kind of a continuation over the last couple days. Here on Qs, we had this bearish rising wedge right here on the hourly chart. We broke the wedge right there, but we haven't broke down yet. We're just going sideways, and you can see each tag of this short-term support, which is really just the initial pullback before the buyer stepped in, has held as support so far. So you can see support through here, support, and then today we're kind of right in there as well. So we need to see that go if you're looking to short the market. You know, if you're looking to buy the dip, you know, this isn't much of a dip. So that's getting... you know, you can do whatever you want. If you want to buy the dip, fine. It's worked. You know, it's worked for a while. But, you know, we don't have much of a dip today. So, you know, I would be looking to buy at much lower levels if looking to put new money to work. If you're long and you know, you can remain long. I don't see any reason to, you know, exit along. Although there's all kinds of indicators that are signaling that we're really pretty stretched in the market. So things to look for. On the SPY, we started to break. So this is kind of the similar pattern, bearish rising wedge right here on this hourly chart. We broke, drifted sideways, and now today we're starting to break to the downside. So, you know, that's one checkbox that you've got, the, you know, that the short trade is going to start to work out. However, you need to see those tech stocks break. You need to see triple Qs break that trend line support that I just pointed out. Looking at the FANG stocks, Amazon, again, big daily chart. You can see we're just still sideways in this big sideways range going back over a year now of sideways price action. So no real gains. You know, if you're long-term trend trading, there's really no gains. There's just been, you know, chop basically between these ranges. So until we see a resolution one way or the other, we don't know which way this is going to go. Resistance right there, 3555, and we hit that, and we're starting to sell down. Google, you'll see on the daily, again, we just continue to drift higher. Nothing really impulsive. It's just a slow drift, kind of a grinding drift higher on pretty low volume. But we don't have any sell signals or breaks of trendline support either. So until I see a break of this trend line, then, you know, no sell signals on that one. Microsoft, short-term trend line on the daily chart, upward trend line right there. And you can see we're just selling down right to support. No break of trend line support, though. So until we see a break, no reason to short, or, you know, we just have no action to take right now. We're just kind of watching markets. And then Apple is, you know, Apple's really just hanging in there. I don't see anything on Apple either. Really, for a sell signal on Apple, I'd like to see, one, those other FANG charts start to break their support line, and then Apple ideally break this 144.50 area as the next sell signal in Apple. Facebook continues to drift higher within the bearish rising wedge. It's gone nowhere for about a week, so, you know, we'll move on. It's really been the same thing this entire week. Just no change in these. Okay, gold. This is the one that looks the most interesting to me, to the long side. And again, there's no momentum yet, so we don't have upward price action, upward momentum. Well, we don't have upward price action, but we do have upward momentum. So I want to point it out here on the daily chart. This is gold bullion, and you'll see here that this is your bullish divergence right here. I have it kind of circled out. This can build for a while, so it's not an indication that, okay, we're going to move right now, but it is giving you an indication that the momentum is changing. And you'll see here how we continue. I've got it circled. We made a low right here, and here's your low in momentum, and then we dipped down and made this new low, and yet the momentum was a higher low. So we have an upward trending slope to the trend line in momentum on the RSI and the PPO. It's kind of equal trending on the RSI, but equal, you know, the same level of the same level, equal lows with lower lows in price is still bullish divergence. So we have bullish divergence in the momentum. Again, if these concepts are unfamiliar to you, check out my course, link in the description below. All right, and then we recovered this trend line here on the daily chart. This is your upper trend line, held support through here, and then we've recovered that. And you can see today's basically a repeat of yesterday. It's 2 days of testing this trend line. There's just a ton of support right here at 1790 basically. And again, just to point it out again on the weekly chart, that was your former high in the last bull market. Tested it once, twice, 3 times. That's 1790. And as I zoom in, we're testing it right there. So lots of support right in here. We're basically at the crossroads of major support. So I would expect that a big move is going to come out of this level. And the momentum, the indicators pointed up are telling me that that move should be to the upside. That's where the probability lies. If you don't get that move and it breaks to the downside, it's probably going to be a pretty big move to the downside. So things to watch, but as far as I can tell, we're holding that support level, kind of chopping below it these last 2 days, kind of running some stops, but ultimately recovering each day. And still looks like we're good and bullish. So the miners are still selling off a little bit. Again, the miners are likely going to have some sort of big snapback move. They're just kind of grinding around. Here's GDX. You can see we have bullish divergence. See how the momentum is sloping up, and yet we were making lower lows in price. So these were all lower lows than the previous low here, but you can see how the momentum was here, and then it starts turning up, and the lower low in price was a higher low in momentum. And I kind of have that circled basically right there. So that's bullish divergence. And the miners are likely going to recognize when gold has a big, if it breaks out to the upside and you see that big breakout support, and the buyers are right there, that's when the miners are likely going to have a pretty good size move to the upside as well. So I've been getting positioned for that over the last couple weeks. I've been adding and building a long position over this consolidation period right here as we're at support. And by the time you get that big move, if it shows up, again, nothing's guaranteed, but when that big move shows up, that's usually not necessarily the time to be piling into stocks, and buying it. Yeah, you can buy it on a breakout if you want to be extra sure, but, my positions will be well into the profit at that point in time. Okay, let's move on to KHC. This was a long trade idea. I want to point out a few things. We're watching for a potential bull trap. On the daily chart here, you can see we're running into some good support right there at, it's about 36, it's about 36.14, 36.15. We're above that now, and that was that former gap right here. We had an upward trend line right there. We broke trend and we sold all the way down to that level. We've so far have held, but you'll see we have this downward sloping line that I've had marked out on the daily chart. Let's go to the hourly to show that in a little more detail. So there it is, downward sloping line. Now you can see as we're drifting lower right here in price, you'll see how the momentum has been moving higher. So that's bullish divergence right there on the PPO, and it's there on the RSI as well if I just kind of mark out the low right there. So we have bullish divergence on both indicators as we drift lower. And then yesterday we had this big breakout candle, and we really closed the day right there above that downtrend line. Today it looks like they're back testing. Now we're right in the area, so let's see how the day closes. I would look for impulsive selling, or are we kind of, if we just hang out in this area right here, then I still think that this is likely a back test and we're going to pop like that. But if you see impulsive selling come into the close, then maybe we got a short-term bull trap and you might want to exit that position and wait for it to break out again. That's likely what I'll do. Otherwise, I would expect the way this is going to play out is towards the end of the day, we're going to close right in here, right on the trend line, keep everyone guessing, but I think it's likely we're going to break to the upside. So things to watch on that. Potential trade idea right here, XLV. Things to watch. So on this daily chart, this is a really big pattern. This is going back to March 2020, and it's really created this big bearish rising wedge over the, since that time frame basically. And you can see that we basically have broke to the upside of this bearish rising wedge pattern, but there's no follow through really. You're just kind of breaking and chopping around like that, selling back down. It's not really an impulsive breakout that you see carrying that momentum higher. So to me, that tells me that this is likely a false breakout, and there also the probability means you have negative divergence basically right here. So this breakout right here is a divergent high. See the negative divergence, how the momentum's dropping off, and you're just not going anywhere. So the probability right now tells me we're likely going to get a false breakout, and we're going to break to the downside and ultimately break this bearish rising wedge. These patterns, a lot of the time you'll see these moves where it breaks to the upside, kind of fakes everybody out, runs a bunch of stops, and then makes the real move that it wants to do where it breaks to the downside like that. So if we get that, I would look for some support. If we get that big breakdown candle, I'd look for some support right here at about 125.58. And now it's about 125.75. And then potentially down here, 119.02. So watch those levels. And those would be good, some sizable moves in the healthcare sector. That would be, the first support is about a 6.5% drop, and then that second one would be about a 11.5% drop. So things to watch on there. I'm kind of keeping an eye on that. If we get that breakdown, we'll likely have a short entry on that. Okay, someone asked me about corn. I've started to buy back a corn position. This is a long trade. On corn, you can see corn's clearly in a bull market. You have, since August of 2020, we've basically just been moving higher. And if you zoom out on corn, bigger picture, this is going all the way back to 2014. Clear downtrend right here where you have rallies along the way, kind of bear market rallies, but it continues to trend lower. This is different right here. You can see that this was a clear breakout of the trend. We're starting to make new higher highs and higher lows. But it got pretty extended. You can see that we rallied all the way up here to 22.96. So since then, we started to build negative divergence and really started to, your negative divergence showed up right here. I have it circled on the RSI, nothing on the PPO really. But we've broke the upward trend, and we've come to the first level of support right there at 1917. So I'm watching for the buyers. I think they're going to step in right here. This is where I've started to build a position. I've taken a half position. There isn't, if we don't hold here and we break, then we could head all the way down to the next level of support, which is about 17. I got it at 1750 about. That would probably likely be the final drop point, and we should hold support there for the next leg higher in what appears to be the start of a bull market in corn. So that's what I'm doing. Someone asked me yesterday what I thought of corn. Well, right here we're at support right there. So 1917, that's support. We should get a bounce here. If anything, maybe we're going to bounce up to hit that trend line all the way up to 2095 or so. That's a potential trade idea right there. Or if you believe that there's a lot more to go, then this might be the low that we're going to see and then start to make a new leg higher in corn. And here's a sell signal. We got it the other day, but basically EMR, I talked about that. Yesterday we broke that trend line. So here's the short-term trend line on EMR, and we got to close below there. And today you can see big red candle, impulsive selling. So that's definitely a sell signal. This has had a negative divergence really building for quite some time. So it just has continued to trend upward. Our initial sell signal was right here on the break of this trend line. You see that big red candle right there? So that's your upward trend on EMR. We built that negative divergence as we approached this area, and then we got a big break of that trend line right there. So that was your initial sell signal, but then it did another counter trend rally, and boom, another sell signal right there. So I think we're likely starting the downtrend now in EMR. And this one I think could head, has the potential to go all the way down to 71, about 72. I've got it circled down here. First level of support, which I think is a very high probability trade at this point, would be right there at 93.60 or so. You can see we held support here, held support here. I think we're going to trade right down to that. Probably get a bounce there. It looks like the 200-day moving average is going to come in right there as well. So I think it's likely we'll get a bounce, at least on the initial tag of that and the 200-day moving average. And then we'll watch for, further weakness. So things to watch on that, but it does look like we're heading lower. And a couple trades to wrap up this. These are kind of new long trades. Love LUV. You can see here we have bullish divergence that's been building for a while now. So you can see the momentum clearly on the RSI and the PPO are starting to turn up. And yet we've been chopping around. This was a divergent low right here. You can see we made a new lower low in price, and yet momentum was much higher. And that was it. That was your last divergent low. So maybe we want to make another one. But you can see we're kind of chopping around with bullish divergence. So, the thing to watch on this, it depends on what the general markets are going to do. But, maybe we get a bounce up to the 200-day moving average, about 53.81. We haven't really tested that from below too much. So there's a potential. There is some support also right. Oh, let me grab the right tool. It's right there at about 49.31. You can see today we're kind of getting rejected right there. It's above it slightly, but we were above it and better, and maybe we're going to close right on it. So we'll see. I think there's likely, if we look at the hourly chart, we could maybe draw out some sort of a trend line like that and wait for a break of that for your trigger or entry, and maybe there's a move up to the 200-day moving average in store. So something to look for there. And then the same thing I'm seeing on American Airlines, AAL. You can see here bullish divergence there and there on the RSI and the PPO. And you can see the last low right there. That was your divergent low. Now we're testing the 200-day moving average from below, still being rejected by that. So I think a break above that, and likely that's going to come in with something like that. On your hourly chart, you can see. So I'd just probably wait for an impulsive break above that downward trend line, and that's going to be your potential buy signal for at least a counter trend rally, or a move up or a continuation of this uptrend. So things to look for there. A couple trade ideas. I'm going to wrap up, guys. Leave me a thumbs up if you find some value in the content, and I'll catch you on the next one. Bye.